sterling.
Now, we've got a ton of economic data being released this week, so to talk us through it, Rod North joins you now, the Managing Director of Bourse Communications. Rod, good morning.
Good morning.
All right, so take us through what the key bits of data are going to be.
Well, this is really the defining week, because I think the Reserve Bank and the government are really waiting to see what sort of economic data is going to come through this week to sort of dictate the pace for interest rates and the outlook over the next 3 or 4 months. Now, we've got the NAB Business Survey coming out today, followed by consumer sentiment on Wednesday, and then we've got the housing finance coming out on Wednesday, and then jobs data on Thursday. So all that information is going to really reflect how things really went towards sort of end of last year.
And with those retail trade figures out from December showing a slightly less than expected outcome, are you expecting these figures may also be a little less better than expected?
I think that could well be the case, Joe, because we've had those 3 interest rate increases in October, November and December, and then of course the Reserve Bank decided in their wisdom to hold off in February, because I think, you know, they really want to see the full impact of that, because it's pretty clear that I think people were really not spending in December. They went out and spent in October and November, and of course so many retailers in particular, even when you look at the results that are coming out just in the last few days from the retailers, I think a lot of them were sort of heavily discounting stock during December and then into January, and that's continued. I mean, I don't know if you've been out shopping
really
lately, there's a lot of stock out there. So, and of course the other thing is that's last season. We've got the new season stock coming through, so I think the retailers are a bit worried about that. So obviously this information, particularly on consumer sentiment and also the business sort of outlook, is going to be pretty critical.
And the housing finance figures, of course. I mean, it's not quite the old-fashioned data of housing starts, but the finance figures are going to be very revealing as well.
Yeah, that'll be very revealing, and I think we'll probably see that that sort of slowed down a little bit as well, because certainly through 2008 and 2009, that whole sort of housing thing with the stimulus really sort of kept up to a pretty heady pace.
And there are some key earnings figures out this week as well?
Yes, we've got the major heavyweights coming out this week. We've got CBA, we've got BHP Billiton tomorrow, and then we've got Rio coming out on Thursday. And that'll be very indicative of where the market's going to go really over the next few weeks.
And you'd expect them to be powering on despite those concerns about China?
Yes, I think in particular those companies are going to report, particularly the ones that are resource-based, are going to report pretty significant earnings, you know, which reflects the period up to the 31st of December.
And now JB Hi-Fi seems to exist solely as a successful company only if Richard Utrich is running it. The moment he said he was going to leave, shares fell off a cliff there.
Yeah, that was pretty remarkable because, you know, 29% increase in profit. And that's a company that listed in 2003, has traded profitably since that time, increased its earnings. It's absolutely had a dream run. But I think the thing that's important to realise there is he's been there for 10 years. The COO is going to be taking over that position, and he's actually been with Richard really for the last 10 years, so he should step into the helm there quite well, but the market really doesn't know him.
I guess not, but also picking up on Joe's earlier point, it was surely also to do with his comments about a reasonably poor, not a poor, but a slower retail outlook, which, you know, sinks in with what we might be expecting to see this week with those figures.
Well, that's right, and of course we had Harvey Norman and in particular Jerry Harvey coming out singing the praises of retail, you know, just before December, and we haven't quite seen the results we expect, have we? You can be optimistic, but you've got to be realistic.
That's right.
Now, just finally, another 100 points down on Wall Street overnight. Just how bad is this European problem?
Well, I don't think we know the full sort of consequences of it, and I mean the whole debt situation in the world is a worry, there's no doubt about it, but it's interesting how we had this sort of massive problem in Dubai and then it sort of blew over several weeks. So, of course, everyone in the financial services sector is sort of hoping that may well be the case, but it will have some impact on our share market over the next few days, there's no doubt about that.
The issue of Greek sovereign debt seems to be a key part of this as well, and I would never have thought that the individual plight of that particular country could have brought us about to this pretty pass. I'm wading my way through a 75-page article in The Economist on Greek sovereign debt. I'll report back to you tomorrow on it.
Very interested to hear about that.
I need a nice lie down afterwards. Rod North, always good to see you. Thank you.
Thank you.